co-founder, Smart Sync Services. Ankit is a MBA from Xavier Institute of Management, Bhubaneswar, with 10 years of experience in research and investing in stock markets. Welcome, Ankit, for today's session.
Thank you, Peter. Good morning, everyone. Thank you, Peter, Sankha, and team Paytm for inviting me here. And a big thank you to all the attendees. I'm Ankit Kanodia, co-founder and partner, SmartSync Services, a SEBI registered investment advisory firm. Before starting our discussion on the budget, I'd like to share that we at SmartSync Services believe that basing your long-term investment decision just on what the Honorable Finance Minister says about an industry on the Union Budget Day is not a great idea. Having said that, let's begin with how we see this budget. By this time, you would have already heard from a lot of industry experts about their wish list from the budget, and that's a long wish list. We would not repeat the same stuffs and bore you early in the morning. And one observation we have is that everyone looks at the budget from a narrow perspective, uh, narrow perspective of their own industry. I mean, so it's like I, being an investor and investment advisor, wishing of removal of long-term capital gain tax. Of course, I would be happy if it is removed, but only hoping for the same is thinking too narrow. So we would rather look at in a far broader sense that can benefit the nation in a much bigger way. Let me put some hard facts first. In a country of roughly 140 crore people, only about 6.5 crore file ITR, only about 1.5 crore pay taxes. As per income tax data, only 8,600 people have income above 5 crore. Only 42,800 people have income above 1 crore. And 4 lakh with income of more than 20 lakh rupees account for 63% of income tax collection. And most of these taxpayers, tax paying persons, are middle class salary persons. You would be surprised to know that only 2,200 doctors, CAs, lawyers, and other professionals have disclosed annual income of more than a crore. All other categories like businessmen and agriculturists, by and large, find their way out to escape this. So, what can we do about this? Or how can the government fix this? We believe it is possible. But first, let's take a step back and review how, over the last few years, Aadhaar linking, Jan Dhan bank opening, demonetization, and GST have been instrumental in both formalization and digitalization of the Indian society and economy. This budget can further accelerate the process of formalization and digitization by replacing income tax with consumption expenditure tax. Now, consumption expenditure tax is not much different from income tax, just that the base of tax is not income but consumption. This will not only mitigate the harmful effect and inequities of non-comprehensive income tax, but also help us to be more responsible with our consumption habits and thereby increase demand for savings and investments. It may sound a little too bold and optimistic at the outset. You may think it looks good on paper, but there will be plenty of problems in implementation. However, remember that something similar was being said about Aadhaar, GST, etc. And even they faced implementation challenges. But here we are reaping the benefits of all those reforms. The current budget may or may not introduce the consumption and expenditure tax. However, look at what the broad message the government wants to convey through the series of three in the last 3 4 budgets, and it is that India is in an irreversible mega trend of unorganized to organized shift, formalization, and digitization. With this opening remark, I think we can take some questions.
Yeah, right. I think we are with Mr. Shankar Mukherjee. He is a trading expert and coach at Paytm Money. Shankar, welcome to the session.
Yes, and
Yeah,
thank you for welcoming me, Peter.
yeah, yeah. Shankar, my first question to you: what is the expectation from today's budget?
Today's budget, I have seen 22 budgets. I have personally seen 22 budgets prior to this budget, actually. And trust me, the only thing I've seen in all the budgets, there might be small time jitteriness here and there. So some sectors will get benefited, some will not. Sometimes taxes will increase and sometimes they will not. But ultimately, whatever happens, the market always moves up. So that is a macro picture which I'm sharing with you about my expectations. I mean, post budget, the market about the market right now. You know, I personally believe that the budget may be very progressive. It may not be popularistic because IMF has given a growth projection of around 9%. But and if government comes up with something nasty, then maybe we may see we may not have this kind of growth. That is my fear. So I don't think government will get into that game. So that's my personal expectation, and it will be progressive.
Right. So Ankit has given very good opening remarks. Ankit, my first question to you: do you expect this budget is a very progressive or development focused?
Sure, Peter. So as an optimist citizen of India, I'm always hopeful in each budget, and this one is no different. Uh, so I hope it to be a progressive budget. But uh, as an investor, I don't pin hopes on budget announcements. So
Okay.
this is where I try to make the distinction between the two hats I wear. So as an investor, my focus would always, or our focus in SmartSync services is always towards uh, identifying companies which are not pinning their hopes on budgets. So because our experience over the last 10 years of investing in market says that budget is something which keeps the market excited for some time, and then later on the fundamental of each business and industry follows. So ultimately, what matters in the long run is the fundamental strength of the business, strength of the management, and your willingness to hold on to those businesses through ups and downs. So in that sense, we don't give budget too much of an importance. But yes, as a citizen of country, I always hope that, and even this year also, I hope that it would be a progressive budget, uh, going by what the government has done over the last 3 4 budgets.
Right. The company performance more important than the market and anything else, right? The numbers speaks, and if the numbers are good, then price will move up.
Exactly, you're right, Peter.
Exactly. Yeah. So we have seen like a lot of problems in global markets, like rate cuts and inflation. Nifty also moved from 18,600 level to 16,800 level, means around 1,800 plus points. Now also we are before budget, we are around 1,000 points down, right, from the top. So what is going to be the impact of inflation and global rate cuts, those things on Indian market?
Right.
I'll give this
So
question for you.
okay, thanks. So, first of all, again, we don't watch Nifty levels, and we are not an expert on the macro movement. But let me just share with you our philosophy. So, we believe, first of all, in terms of inflation and flows, you talked about rate cut. Actually, US right now is bracing for a rate hike in some time, and we have been in an extremely loose monetary policy period for a long, long time. So it would be around 12 years, I guess, 12 or 13 years since the loose monetary policy all around the world has been going on, specifically in US and UK, right? And it's like what Nassim Taleb writes in his book about the stock market equivalent of Russian roulette. So we have been used to the loose monetary policy so much that we have kind of taken it for granted. So we as investors are not even thinking about an era or a time when probably this loose money will not be there. So how the market will react to it, how investors will excuse me, how investors will react to it. This is very difficult to pinpoint and suggest, but as a long term investor, we follow this mantra of don't predict, prepare, wherein we would like to prepare our portfolio by staying in resilient businesses which have gone through several shocks like this and still continue to perform well. So that is the only thing you can do as a long-term investor. Of course, as a trader or a short-term investor, you can have some hedging strategies which we don't indulge in. So we are not there to comment on that. But as a long-term investor, the only hedge is buying good quality businesses and holding on to them through ups and downs.
Peter, I personally feel what you're saying. For short term trade, long term, it's always going to be the way it is. Uh, I think inflation is the real tax for the poor. Like we pay income tax. Similarly, poor people's tax is actually inflation, and that's the tax which all the governments have been charging all of us by pumping in liquidity and all the other measures which they keep on doing. That I think that they realize that inflation has right now risen. So whenever the Fed comes up and says that I'm going to increase the rate of interest, it's a sign that somewhere the economy is reviving and it does not need stimulus. See, I have a personal, whenever there is a budget, I try to look at sectors which are given stimuluses, like everyone does. But my take is contra there. A sector which actually needs stimulus is a sector which is not performing. Have you ever seen any stimulus coming for private banks? Have you seen any stimulus coming for IT companies, FMCG companies? It's never so, because they're performers. So I think somewhere we should stick to the performing sectors and look at sectors which are given stimulus and slowly they move up the ladder, and then start, once they don't need any stimulus, maybe they start earning better. It's a good way to invest. And you spoke about crude, right? And the Nifty levels coming down. See, if you look at Peter, Nifty had been primarily following the global market trend. So whatever is happening in the Dow Jones or whatever is happening globally, that's getting impacted. Budget day, definitely it's going to be an impact on the market. There will be impact in the market.
Right, Shankar. Shankar, see, mostly what happened, like when the
Hello, Peter? Hello,
Yeah,
Peter?
he's having some technical
Okay,
issues.
okay.
But he should rejoin.
So for long, though we spoke about long term, for short term, I think market looks bullish. I think
bit of glitch,
yes,
I think.
yes.
I'm sorry. So my question was,
Please.
like mostly what happened, like when the equity markets start performing, gold usually don't perform. From last 1.5 years, we are seeing like gold is like moving in the sideways, right? And still, the market came down from like all-time high to around couple of 8% or 10% correction, but still there is no movement in gold. So is that indicating something like there is a room for upside movement in equity market? What's your view?
See, there are most of the scenarios like gold is a perfect hedge, especially when you look at inflation. It's a good hedge against inflation. It's a good hedge against wars. It's a good hedge whenever there is a market crash. But gold, whenever the bond prices moves up, or there is a fear that the bond, it's time that now the bond prices will move up, that's the time when both gold and equity moves down. So I think the fear right now is Fed increasing rates, and that's why even gold is looking at coming down for the moment. So which is very healthy because markets cannot just always move up in a straight line. So gold also needs a bit of correction for some time, maybe.
Right.
But of course, like you said, in long run, we have seen both gold and equity and bond, everything moves up. It's just that during some periods, they go contra against each other.
Right. So even crude oil is continuously moving up from last 1.5 year months. We can see like from $65 to $70. Now it is reached around $90. Will that impact our Indian economy? If else, then which all sectors may impact?
Crude is primarily moving because of the geopolitical issues, that's one. And every year during the winters, the crude is something which always, crude is something which always increases. That's because most of the European countries they generate heat using the oil. Basically, Brent crude is something which they use. So there is a demand for that. At the same time, Russia, there's this tension between Russia and Ukraine that is also increasing the demand for crude because Russia supplies a lot to these European countries. I think, if I'm not wrong, 30% of the European supply comes from Russia.
Right. So I think Ankit is back.
Yeah,
Hi,
Yeah,
can
okay.
you hear us?
yeah, I can hear you, Peter.
Yeah, I think you dropped, right?
Yeah.
Yeah, no problem. Yeah. So I had one question for you.
Hmm.
Like FIs are continuously selling. The FIs are a part of like our market, and when they start pumping, the market moves up, and wealth creation starts, and everything, right? So they own a lot of stake in lot of companies, good companies. Now, from last 1 year, they sold a lot. We can say around 1,000, like 92,000 crores, and this month itself, like in January, they sold around 41,000 crores before this budget, and they're continuously selling from last 3 4 months. What will be the impact of this, and which all sectors may get impacted, or should we worry about this?
Sure. So, Peter, see, if you look at the long history of FII investments in India, so a clear-cut pattern which emerged was when FII used to sell, it would have been better to buy because if you look at 2008 crash, 2013, even in 2018, 19, all those time when FI was selling and the market was going down, as a long-term investor, you would have probably done well by just buying good businesses which you know about. So again, I'll just allude to one of my our philosophy is that you should ultimately to make money in the market to create wealth, you should be able to understand the business pretty well because these kind of shocks will keep on coming from time to time and you cannot prepare for them. See, you cannot prepare or you cannot expect that you will be knowing in advance when the FIs will be buying or selling. So that is why we always believe that know few business and know them well. That is the only hedge against the FII onslaught. But having said that, if you would have just followed what FI has been doing and you were expecting a fall in the market, the whole of last year FI continued to sell and our market continued to rise. So what does that say? That say one thing for sure is that maybe the retail investors uh, investments in the market through SIP, through mutual funds, through index funds, it is going up every day, every month, every year, and specifically post the pandemic hit, I think it has reached to a certain level where probably today the FAI impact on the market is not as great as it used to be in the past. So that doesn't mean that the market will never fall. It can always fall, but not necessarily only due to FII. So again, rather than looking at the flows as to where FIIs are buying or selling, you should continue to look at businesses and industries. So you talked about, or you asked about the industry where we should be looking at or getting impacted. I would rather thinking from that point of I would not think from that point of view whether which industries will be impacted more because of FII selling. Rather than that, I would think that in a different way as to which industry is far more suited over the next 2 3 years, 5 years, where I can bet on, where we can bet on. So just to give you one example, is travel and travel related industry has been having one of the toughest time since the pandemic hit. And uh, but if you look at the stock prices over the last 1 year or 15 months, they have started rising uh, pretty fast for all these companies. So uh, if because of FI selling, if some of these travel companies stock price go down, we would be looking to buy some of them or increase exposure to already own some of the stocks. Why? Because we see that the travel and travel related space in India going to get not only from this budget, but also in the long term, a lot of tailwind in Indian market. So that is one example I can give you that this is how you can uh, combat the onslaught of FIIs if you are investing in the market.
Yeah.
Peter, that is so right, which Ankit shared. But again, you have to look at from this point of view as well, the global point of view as well. Like sometimes it's stuck in our mind. Like FIIs are selling, are they dumb? Markets are moving up, they're losing money by selling. Are they, I mean, stupid people? Why are they doing it? They're not stupid, they're smart. What they do, FIIs don't invest only in India, they invest globally. So when they're using it, like we have this Nifty 50, Nifty Bank Nifty, and we allocate our, the allocation in a particular sector in the index. The index has a certain allocation. Similarly, they have a global allocation matrix. So they will invest X percentage in US. They will invest X percentage in China. They will invest X percentage in India. So India, by default, if you look at the global market cap, India is having around 3% of the market cap. So if there is a reduction and the FIIs are moving, they sometimes move because maybe they are reducing their exposure in equity. So that time they take out money from every country in the world, which includes India as well. So that might be a reason why FIIs exit. Not only that, they're just exiting just like that. So they work on the global asset allocation model, global model, equity model, and asset allocation model. So based on which they exit.
Yeah,
And
excellent.
also one thing we have to remember that when they evaluate equity or Indian markets, they evaluate Indian markets in dollar terms, not in INR terms. So if you look at the pandemic crash, markets went down to 7,700, 500 levels. So that was in dollar terms, we had reached 2005 levels. And that was a very good entry point. Like if though we look at it like, and so let's say that 2008 ka peak to पहुंचा ही नहीं. Many people were expecting to technically it will come to 6,300, 7,600 levels, but that never came because in dollar terms, if you look at it, we went beyond 15 years. That is 2005 levels. So that's where the buying came. Even from, they also supported. There are two things when FIIs are investing. They look at global model of investing and asset allocation model. Plus, they look at the dollar valuation of the index. So that way.
Right. I think Ankit has one point.
Yes.
Yeah.
Yeah, Sanka, so I completely agree with you, and you had made some really good point. But since most of our attendees are probably individual investors, so I would like to speak on their behalf and how we believe that we should look at
Of
participation
course,
in ETFs.
the reason why I said that, like sometimes we wonder why FIIs are leaving
Right.
when they could have been sitting here in Indian markets and making profits. Why are they leaving? The reason is they have their own reasons, and these are like different reasons. Like it can be asset allocation or anything else, not just market movements. So,
Right. Right.
and just
Right. So
3% of exposure. That's it.
exactly. And so what we can do, as in what we should do, is that we should first understand that market is a very complex mechanism, and the daily up and down of price level, be it of any stock or any sector or any index like Nifty or Sensex, these things will be impossible for any individual investor. Rather, I would not restrict myself to only individual investor. For any investor to predict them. So, so that is why, as an investor, our focus should more be towards understanding a few businesses and then focus on that, because I'm not saying macro doesn't matter. Macro does matter. Of course, the flows does matter. And the problem is that you can't correlate the flows movement. Like, say, for example, budget does matter. I'm not saying union budget doesn't matter, but how union budget will impact the price level of the stocks which you are invested in or interested in. You can never, you can never even think of being able to do that. So why focus too much on what would be the budget impact on this company's earnings today? Or because budget impact can never budget cannot give you a clarity as to if our honorable finance minister has announced so and so soaps for a certain industry. This is how ABC company will get boost in the sales, and then this would how their earnings will look like. You cannot even think of talking like this or thinking like this in terms of your company's performance. So if that is something which is not possible, it is better to just let it go. Uh, as a citizen of the country, you may have your own wishes for the yeah, and in fact, even if you are holding on to some businesses or industries, you may wish for them, but thinking that looking at the budget, you will be able to pinpoint that this is what the market will go, or this is, I think it is better to be left alone, right?
Right.
Right. And if you look at if you look at the macro picture, what uh, Ankit said is really right. Like you should not be dependent only on budget, but budget is a good place to look at what's the objective or goal of the government. So are they going to create a bad bank and then take out bad loans from the PSUs? So that will do a lot of cleanup. Are they going to invest on infrastructure? Are they going to come up with some schemes for housing? Like they may give us some interest rate benefits, like you can add as well as our principal repayment benefits from ATC. So those things are also going to be looked upon because that will also help us gauge how much of demand can the government increase in our economy. So that's the way I look at budget. And of course, there will be sectors which will be beneficial. And I like always believe in like if you can't make out which sectors are going to do well, just invest your money on the index. Invest in your ETFs, index funds, and just sleep over it. When the market moves up, everything will move up.
Right, Shankar. So on the basis of budget, maybe we can identify, like, say, like this sector may get some benefited, like infrastructure or any other sectors. But choosing the company is a different ball game. I think Ankit has rightly said. The end of the day, the performance of the company matters, and not the market or anything.
You're right, Peter. So, for example, every budget, we do see some benefits given to the banking sector, at least. That's the PSU banks. Now, PSU banks, the big banks which are there, definitely they will. Big PSU banks like SBI is one of them. Generally, they will get some benefit out of it. But people, then nowadays there are instruments where you can just directly invest in the PSU bank index. So one can look into the stocks there, see the valuations, and if you don't have time, invest in the PSU banks. Like there are ETFs available for PSU banks. For the banking sector, you have ETFs available for that. So pharma also, like with the kind of the COVID crisis which we are all going through. Of course, this time luckily it's better than the Delta variant. So pharma stocks may also, when the government realizes that there will be a need for the building.
Shankar?
I guess he got
Ankit?
dropped off.
He dropped out, I think. Okay. Ankit, I have a question for you. See, crude oil is continuously moving up from like December first week, it was around 65 to $70, now around $90. So definitely it will impact Indian economy, right? So what is your strategy and which sector you are avoiding, or do you have any strategy for this? Ankit, Harsh, can you hear me?
Yeah, I can hear you.
Yeah, hi, I'm back. I think there was some issue
Yeah,
with Twitter. So I
right.
didn't get your question, Peter.
I was asking regarding the crude oil. Crude oil is continuously moving up from last 2 months from 65 to $70 to $90. It's this price increase in crude oil definitely it will impact on Indian economy, right? What is your strategy? So which sector, like, or any stocks you are avoiding or any stocks you are buying? What is your actual strategy for this?
Okay. Uh, by the time Ankit joins up, I think crude oil price getting increased is something which is hurting our overall globally. That's a concern because, but again, the good side of it is government may allow increased amount of ethanol being added in our petroleum products. So that could be a good that that could be a good news for the sugar companies who are mostly into manufacturing of that. So that is one that sector may get benefited. And secondly, there can be more stress, increased stress on the EV manufacturing of the electric vehicles. So that's what which I look. That's the way I looked at it. The other way to look at
Yeah,
it is again, see, it's not just crude oil price, but again, there's a seen on global warming which is happening. So every year we lose on credits related to the pollution and all. So government is going to make our infrastructure very efficient. So it's a very simple example is like if you are like say stuck up in a traffic, you spend more petrol or fuel in that. So the working out on the highway, especially the if you look at the Mumbai Delhi highway, which the government is planning to work on, those infrastructure projects may get a good push. So again, the infra stocks related to that would also do well. So crude oil is a concern, and everyone wants to reduce their consumption from the economy. And government may take measures not only by adding ethanol, but also by making a better infrastructure and pushing on the EV.
right. I think Ankit also
Yes,
asked.
Ankit. Right.
Yeah, yeah, sorry.
Yeah,
So I heard your question, but then I got dropped off. So
yeah,
regarding the crude oil again, so $90 is something which we have not seen for a long period of time, right? And as we earlier discussed about the rising case of inflation in the economy. So one thing which we believe, if we understand capital cycle, so what has happened over the last 10 years because of low capex, low private capex, low industry environment, there have been a very good that was a good environment for stocks like sectors like FMCG, pharma, some of the chemical companies also, they did well. But probably if we are entering into this inflationary environment and where crude is already back to this level, uh, it will affect two different kinds of industries differently. So anyone who is a producer of crude, or producer or extractor of crude, or something, or someone related to that kind of a space, would be at an advantage right now. Uh, but anyone who is a converter, who is using crude oil as a raw material to make further products, would find it very, very, very difficult at the current juncture. So, in terms of converters, only those companies or industries, I would not say industry, those companies or businesses would be able to do well, who have some sort of a pricing power, and they can pass on the inflationary pressure to their customer. And there are very few companies like that. So, all in all, crude, if stays like this, it would probably affect two different industries in different ways. I've talked about the converters and also the producers. So at this time, you are better off trying to be with the producers, because of two things. One, they are going to get benefit of this thing, the crude prices. And the second thing is that over the last 10 years, because of their underperformance, the valuation of those companies are really attractive. But I would like to add a word of caution. These are extremely cyclical businesses. If you can understand cycle and you can time your exit really well, you may look at investing in them.
Right. So that's true, Ankit. Ankit, there is a lot of buzz about EVs, electronic vehicles. Maybe people are expecting in this budget also some incentives for EVs. So what is your view?
So again, so budget I'll segregate the question into two parts. What are our expectations from budget, and how we look at it as investors. So from budget perspective, we are very hopeful that government will keep on announcing more benefits for EV players, so that they can make more capex and get more relief in terms of their balance sheet. But as an investor, I would I would still believe that it is better to invest in those businesses which are not affected too much by EVs, because you still don't know how the EV landscape will. So so
Very true. Very true.
there are different set of people. So some investors say that most of the money is being made when there is uncertain and things are not very clear. But uh, would you like to just throw your darts in darkness? You would like to have. So even though investing is a probabilistic game, we always bet on businesses and companies where we have a fair idea as to where the management is trying to uh, go, where the business is going. We have some sense of the direction. But in case of EV, even the technology right now is at an evolutionary stage where we don't know which kind of, whether it will be hydrogen related or some other technology. We still don't know which one will, and we don't have the infrastructure ready. Of course, there is no denying the fact that EV is going to be the future, and there will be. So I would say, as an investor, a better way to look at is probably bet on natural gas company, because a biggest beneficiary of this transition to EV would be that there will be more usage of natural gas, because natural gas is far more uh, better for the environment compared to the other fossil fuels which we use. So bet on those companies, because there you have some sort of a certainty as to where the market is going, where the demand is. You have seen how Maruti has announced the amount of capex they are going to do now, specifically for CNG cars. So those are, so I'm not recommending a Maruti here. I would recommend rather companies which are into those natural gas space or gas exchanges where the balance sheet is very strong and you don't have to earn make any capex investments. So those are some of the business. Or even in the auto sector, there are some companies or some even auto ancillary companies which are, say for example, tires. As of now, you don't see tire getting any much getting impacted by the EV. Whether it is an EV vehicle or a non-EV vehicle, you will still need tires. So look for those businesses where the impact of disruption would be far lesser or probably non-existent. So it looks heroic when you talk about EV, and it will look even further heroic when some of your EV stocks may do well in the next 3 4 years. But today, betting on them is, according to us, is a little too speculative.
Yeah, wonderful. Wonderful
Peter,
explanation, I think. Yeah.
Peter, for me, like I completely subscribe to what Ankit said, but for me, I also understand there is a pe- people love this idea of investing early. So even if this is an advice to people around, so even if you want to invest in these kind of stocks, so keep an allocation and a maximum 3 to 5% of your portfolio in these equity portfolio for these kind of projects, not more than that. So if you go beyond 10%, and let's say you invested in a company which is going to come up, use battery as electricity as power for powering the vehicles, while the new age can be nuclear. You never know. I'm talking about future. So suddenly your stock may underperform. So stick to allocation of maximum number or maximum, set a percentage that beyond which I will not be investing, beyond which I will not be managing, I will not be taking up risk in these unknown sectors. So, but, even if you have, if best is you avoid it. If you don't want to avoid it, then also like keep a sectoral stuff. I'll give
Yeah,
an example here. Many people in that period of time, I know if I speak about it, many people would feel very bad about it. That many people invested in Yes Bank when it was crashing down. And I had personally seen many people averaging at lower levels. That always is the case because it used to be a stock at 400, now it's 142 and coming down. Won't you buy it at 80 rupees? So we all get tempted. Within 1 quarter, these things were happening, and many people got tempted. People who got saved were people who said, I will not invest more than 3% of my allocation in one stock. So those are the people I know them personally, and that includes me. I had 1% allocation there, not beyond 1%. So beyond that, sometimes even if you want to take, even if you see everyone is buying, you get stopped by your system, and your system says you cannot enter, and that saves you a lot of time.
Right.
So
yes, Sanka, completely agree with you. Just one last small point I would like to make here. So, a very good thumb rule which you can use while investing, whether it is EV or non-EV business, is just try to ask this question: how do you see the business model? How do you see the company making money over the next 2 years? Forget about 3 years, 5 years, 10 years. Just try to ask this question: how will they make money? How many products or services they will be selling, and how the money will flow into their books of account? If you can answer those questions, you have, be it an EV or a non-EV company, you should go ahead. And if you can't, uh, it's completely a no for you, right?
absolutely avoid.
Right. Uh, there may be like we can spend another 5 or 10 minutes, I think, maximum. So, Ankit, I have one question for you. The market is historical high now. So, which all sector you are preferring to buy right now, and which all sectors you are avoiding? Maybe your expert answer may help our listeners to choose those those companies, which of the sectors are good and performing for long term or medium term perspective, and which of sector we need to avoid.
Sure. So, uh, first of all, linking it to the current budget, Indian budget. So, even though SOPs may be announced for a particular set of industries, as long-term investors, we believe that we are better off being focused on these mega trends of formalization, digitalization, and unorganized to organized shift, because these are irreversible trends and these last multi decades. It's not about one union budget or not. So when you now break it down and go further into which of the industries can benefit out of it, so the digitalization and the formalization economy will definitely help the banking and financial industry. Okay, so that is where, but again, when we are saying we like this industry, doesn't mean to say that we want to buy a lot of stocks in that. We would like to buy businesses where we understand, because banking and financial industry is also probably the most difficult business to understand. And let me explain it with an example as to, even this is probably the only business where even the promoter or the management has very limited knowledge of the risk which lie ahead. So how can you or me as an investor can be very cognizant of all the risk, right? So you should always focus when you are investing in banking financial businesses. Focus on two things particularly. One is how is the underwriting quality of the management, and have they seen multiple cycles? So I'm giving you an example. Don't take it as a recommendation. At the current valuation, it is probably very, very, very expensive. It's just an example. If you take a look at something like Bajaj Finance, so what they have seen over the last 10, 12 years, they have seen multiple headwinds in the financial industry, and each time they were able to come out really strong after the problem which they hit. So you should look at those kind of companies, not just Bajaj Finance. There are other financial institutions also where you can see those kind of trade. Bet on them. Don't buy everything at one go, because generally these kind of financial companies will be not be available cheap. So focus on buying them in a staggered manner, but focus on the good quality businesses, good quality management only. If you look for a high growing financial company, I don't want to take the names, but you are always running the risk that there will be a huge blowout sometime in the future. So rather than that, focus on uh, because banking and financials has a long, long, long runway, right? So similar to banking and financial, there are other businesses also, industries also, where this unorganized to organized shift is happening. Something like a footwear, textile companies, tiles and sanitary ware, apparel. Then there are organized food and retail, QSR. So these are how the market or the Indian economy is changing. Why we are seeing so much growth numbers in all the QSRs generally, because uh, the consumer preference has changed drastically over the last 10-15 years. Just try to imagine this thing. If you want to understand about this QSR sector, just try to understand one thing. 15 years ago, how many times your family used to go out to eat, right? And today, uh, I'm sure in most families you get a outside food almost every week, twice or thrice maybe, right? So these are some of the things which we believe have really, again, valuation of different companies are at a different level, profitability of different companies are at a different level. So these are some of the industries. Even luggage industry is something which has come out from the pandemic, and there also the unorganized players have had a very, very tough time, and so many unorganized players have actually shut shop. So when you have those organized players still in the market with a strong balance sheet, those are some of the businesses you can bet on. In terms of avoiding sectors, we don't have any negative view on any sector per se. It's just that we try to avoid sectors which we don't understand. So generally we are we are unable to understand highly cyclical business. So when I'm talking about cyclical businesses like commodities, pure commodities like steel, power, I'm not saying that they will not do well. Probably in this inflationary world, they would probably do much better than some of the good quality companies in the past. But we stick to our policy of, if we don't understand, if we can't figure out how things, like for example in case of steel, even though they may do well over the next 2 3 years 4 years, it is very difficult for us as a team to figure out how the steel prices will move, because there are so many global factors which play a part in it. So that is how we try to look at different sectors. So we try to go for sectors which have secular tailwind and easier to understand, rather than going for hot sectors which have maybe 2 3 year 4 years of runway, and we are unable to figure out how this whole thing will pan out.
Right.
Right. So for me, I completely subscribe to banking and financial services. And in banking and financial services, my favorite sector is your life insurance and the AMC companies. Because one thing for sure, people will not stop buying life insurance, and AMC business, like you and me, we will keep on investing either through the ETF route or through direct mutual funds through our platform. So we'll keep on buying that,
Right.
and if we keep on doing that, the business will keep on growing. So if Nifty today doubles, your AUM in a mutual fund house, even if it's stagnant, that will also by default double, and so will their income will also double. So that's my view on that's my personal view, of course. It's not my company's view, and that's one area I look at. The second area which I'm looking at is like the mid cap and the large cap space, and this time not the small cap space. So if you have to invest somewhere, you don't know which sector to put your money in, so it's better to invest in the mid cap and small cap sector. So buy the full index. So you have ETFs for that. You have mid cap ETFs, you have large cap Nifty ETFs, Nifty 50 ETFs, or you can just buy the whole market by buying Nifty 500 ETFs, or you can invest in the funds as well.
Yeah.
And in terms of style of investing, my favorite style, I mean, historically, you can check it and someone can compare it with value. So, my favorite style is value style of investing. And right now, to me, the Nifty Value Index is looking quite good.
Right. So this is the time to close our session. Maybe we spent around 1 hour time. Ankit, what would be your last advice or closing remarks for our audience before this budget?
Sure, Peter. So I think the union budget can at best be a facilitator for an industry for some time, but it cannot change the long-term characteristic of a poor business. So do not take long-term investment call just based on an industry-specific boost by the government. Look for long-term trends. We have already spoken about.
There are a lot of ETFs which are also equally available. So one can just bet in India and bet in these ETFs if and buy the whole market itself.
Yeah, yes,
Yeah.
Shankar. I think Ankit, sorry, he disconnected and connected again. I think Ankit, go ahead, go ahead.
No problem, no problem. So as I was saying that the union budget can at best be a facilitator for an industry for some time, but it cannot change the long-term characteristics of a poor business. So do not take long-term investment call just based on an industry-specific boost by the government. Look for long-term trends, like we have discussed about the three trends of unorganized to organized shift, formalization, and digitalization, and then see which businesses you understand better, where you have the valuation comfort. Most of budget related discussions are just to catch eyeballs and distract you from the actual work which is going on ground. So even though the union budget is very important event for the whole nation, from a stock market investor point of view, your focus should not be diverted towards looking at the fine print of budget. Rather than you should be looking at the fine print of the annual reports of the companies you are invested in or interested in. That would
Right.
be my comment.
Yeah, great. Yes, listeners, you should follow the budget, but when you are going for investment, your company's performance matters, and that will create wealth for you. So it was a very insightful session, Ankit and Shankar. Thank you very much for joining us and sharing your thoughts. Thank you, Shankar.
Peter,
Thank
Peter,
you, Ankit.
Peter, I would just like to say something
Yeah, yeah.
here.
Go ahead, go ahead.
This is for all the investors here. Whatever we have shared here in this are only and only our personal views and for knowledge purpose only. And we may have positions in the ETFs and the stocks which we spoke about. And it's only and only for knowledge purpose. And it's up to you based on your own risk appetite and knowledge. You should look at investing. Peter, to you.
Yeah, right. So, Shankar, I also forgot that. Okay, you rightly said all the
Yeah.
information what we have shared. This is only for educational purpose. And before investing, please consult your like any advisor, or you have to study more about those stocks. So it was a very insightful session, Ankit and Shankar. Thank you very much for joining us. Thank you,
Thank you so
Thank you,
much.
Peter.
and
Thank you
all
so
the
much,
Uh,
Peter,
audience. Thank you.
Shankar, and Paytm for having me. Thank you.
Yeah,
Thank you, Peter.
take care.
Thank you, Ankit. Thank
Yeah.
you, all the lovely audience who had been listening to us during this time. And yes, we really do appreciate the time which you spent with us. For any questions, for your doubts and everything, you can always DM us, direct messages.
Yeah, you can
Thank
send
you.
message to Shankar or Ankit on their personal message or DM. You can DM to that. Thank you. Thank you very much.
All the best and happy investing.